So, when it comes to support and resistance theory, I almost wanted to avoid this just because there's just so much subjectivity out there and different ways to determine this. But the reason why support and resistance is relevant is because it has to do with the amount of participants that would trade at a certain price. So, just like when at a certain time of the day there's more activity, there's more people who show up to trade at that time, is the same exact thing, but instead of it being the certain time of the day, it's certain price of the chart. So it's more dictated by price versus it being dictated by the highest volume activity of the day, whether it's day of the week or uh, you know 1 hour after the New York Open. The those high volume times to get into get a good position. So support and resistance is similar because it has to do with the story, the thesis of the Bulls and the Bears, and you just want to be able to be on the winning side of that day or that time. And the best time where your team will be represented is during a time where there's a lot of engagement, and that could be either a certain time of the day or a certain price of the symbol. So support and resistance, there's many different types. Starting from the volume side, you got volume profile, uh, and then you got session volume. That one's broken over smaller time frames, and then you got supply and demand zones. You got swing highs and lows. And then you got just trend lines, diagonal, and then so the swing high and swing low is a horizontal, and the supply and demand zones are horizontal, especially like different time frames like the weekly. So and then you got like market structure breaks. So that's when there's like a change in trend in market structure, and it's called a market structure break when an order block breaks, and there's a certain order and how that happens. And typically, I think there's more that I haven't accounted for, but we're just gonna go with what we have here. So I typically try to shy away from like the volume profile. Volume, like when you move around on the chart, the columns of the volume by price, they kind of alter when you change the zoom on those charts, and I don't like that. I want it to be objective, and no matter where, you know, where I look at it, the amount of zoom that it's objectively the same. So the supply and demand zones really appeal to me for more of like a scalping or just a high time frame kind of analysis. Like I like the weekly, and then for a smaller version, I like the H12, the 12 hour, and then maybe the 4 hour. Um, the hourly only if necessary. And so supply and demand zones, I really like that. That's basically the up candle close before the downswing, or the down candle close before the upswing. So that's how you determine supply and demand zones. The supply line is just instead of the close, it's the open. So if it's the up candle before the downswing, it would be the bottom uh, part of the body of the up candle. If it's a down candle before the upswing, it would be the top part of the body, and that would be demand. The other one, the up candle before the downswing, would be supply. And then support and resistance are at the closes of those candles. And then with market structure breaks, it's pretty evident that the breaker candle is now support. Like it's actually dynamic, and you can see it visually. There's more of like a zone that you can operate in, and building an entry. It's really useful for swing trading, just because there's more range that you have to insert in your stop loss for your 1% risk. But for the most part, I like the weekly market structure break and the H4 market structure break. When you get started into the 5 minute, it just gets really difficult because 5 minute market structure breaks happen all the time, and that's usually what happens during the Asia session, where it just kind of goes back and forth, and it just gets really nasty. The H1 is the only one I'll look at to just filter that out. To really limit my number of trades. But if I were to do scalping, I'll do supply and demand zones. If I'm doing swing, I'll do market structure breaks. And then I like to throw in an oscillator to just really help it with the discernment of the smaller time frame market structure breaks, or just the retests and all that for the market structure breaks. Supply and demand zone, I could get better on that. That's something I'm actually working on right now. When it comes to just drawing straight, at a glance, like that's kind of what this is about. It's just kind of at a glance, like where's the highs and lows connecting. I really don't like this because of the subjectivity of it, and you never know if that's going to be a real zone. So I really don't like that. And then the diagonal trend lines, I mean, I bought an indicator for it to help with drawing those in. I think this one has them. Like there it is. You could do a channel. You could do where's the one? This one. On the 8 hour. Um, I put on all of them. You could do it from the highs or the close, and it's basically what I'm shooting for. I'm shooting for on the weekly. I try to go across the highs, and then on the 8 hour, I try to go against have it against the closes. Just because I'm really into this entry process. It's kind of one of the first entries I've been taught, but it's just I like it. It's useful, but so and then session volume, that one's more detailed. Usually underneath an hour is this what kind of session volume you'll look at, and you'll just look at just kind of that. It's a mini volume profile. That's what it basically is, but just for that hour. And then the swing highs and lows. So the swing highs and lows I have on this one. It's those dots, and they're really good for determining like if you had a if you have a swing failure pattern building in a deviation here, and then so usually you could determine a lot of these deviations through with a moving average channel, and you're able to just kind of this is 10. Okay, you're able to see just kind of where support and resistance is, and just play off of that, and be able to see. Okay, you can see it's getting trapped here, left shoulder here, and then boom. Let's see if the H4 catches that. It does from right here. So that's why this the H4 and this H12 on the swing highs and lows are so important. So we're kind of looking for something to come up right in here for the swing high. We got an H12 swing high right here, and then so for around 40, 42, we're expecting maybe price to come up into here, and then where we're going to short. But Yeah, swing highs and lows are very contextual. I don't use them all the time. I use them only when I'm looking for a pattern to develop, and we're just gonna front run that pattern a little bit, and we're gonna meet it at that point where it looks like it's gonna have some difficulty getting above. But swing failure patterns is more for an entry for support and resistance that I use it for. Another one would be moving averages. This is one I typically use the least. I mean, I use a moving average channel, so that's like a subgroup. And this is more to determine the pattern of a swing failure pattern or a head and shoulders. I usually keep the moving average channel at a setting of 10 or 20, and they're really helpful at seeing resistance for that swing failure pattern and developing. For higher time frames, I like the quarterly and the 6 month. But these are just ways to determine where a lot of that team that you would want to side with would show up, of the Bulls or the Bears, and then there's also the time of day when those teams usually participate in the market to where you're riding the wave. But that's mainly the theory between support and resistance. But you already know where I stand. I favor the market structure breaks and then supply and demand zones, and then for entries more of the swing highs and swing lows, with the smaller time frame market structure breaks like the 5 minute. Moving average channels is just for kind of out of glance to see the pattern, a swing failure pattern developing. So that's pretty much it for some kind of tutorial or just walkthrough on just what I value in support and resistance. If you're able to make it work and make it profitable, then more power to you. But everybody's got their preference, and that's typically common. But yeah, you want to go with something that doesn't change a whole lot. So moving averages, they're usually slow and they kind of change. They'll move, so they'll repaint. That's what that's called. I typically like market structure breaks and supply and demand zones because those don't move a whole lot, and then swing highs and swing lows, those don't move a whole lot. Volume profile unfortunately moves when you zoom, and diagonals are very subjective. So they're not always reliable. And I mean, even with an indicator, the indicator repaints, and it's not always consistent. So that's kind of just the bummer with that. But there is no certainties. Everything's a probability, and that's kind of just the nature of the game when you decide to accept this theory or thesis of support and resistance as part of your trading system.